USMCA, the trade deal that he negotiated during his first term with Canada and Mexico, when he said this is very much Canada, Mexico, and the U.S. joining together to take on the world. Well, if you put 25% tariffs on all goods from Canada and Mexico, all of a sudden that alliance breaks down pretty quickly. And that has consequences not just for the Canadian and Mexican economies, it has consequences for the U.S. economy.
Okay, so let's talk about that. 30 seconds left. Yes or no? Do we need to be worried about a recession in the U.S. as a result of tariffs?
I think less worried about a recession in the U.S., more worried about recessions in Canada and Mexico, but that doesn't mean that we won't see a slowdown in the U.S. economy as a result of this. It does not mean that we won't see higher prices in the U.S. economy. And as we stand right now, this afternoon, we are still going to see tariffs go ahead on Canada and Mexico. That may change in the hours to come. We still may see a month from now tariffs. We're still see tariffs go ahead on Canada and China. We may a month from now still see tariffs go ahead on Mexico. And that's a big deal. That's going to be a big shock to the system.
Bloomberg News senior economics writer Sean Donnan. Check out his story. It is today's Big Take. You can do it on the Bloomberg terminal and at Bloomberg.com/Big Take.
All right, let's get to our final guest this hour, and it has to do just the backdrop of presidents signing executive orders, Republican or Democrat. We've seen it with President Trump. We've seen it with President Biden. We've seen it with both the Republican and Democratic executive, or heads of the executive branch, I should say. We've seen in the Trump administration, we've been talking a lot about Elon and his DOGE team in terms of cutting government spending, government workers being put on leave. There's a lot going on right now, which begs the question, what are the allowed powers and actions of the executive branch of the President of the United States, really? And when is a president overreaching and perhaps not abiding by the U.S. Constitution? We've got the perfect person to put that question to. Back with us is Brown University Professor of Political Science, Wendy Schiller. Wendy, good to have you here with us. So what are the allowed powers of the executive branch? Is it very clear?
Hi, Kara. Well, they have been ever expanding, even since Franklin Delano Roosevelt in the 1930s. The president has, the Constitution has general welfare clause. It has commander-in-chief. The president and the executive branch have the power to implement congressional law and also protect the safety and security of the United States. So to provide for the general welfare of the people is a very broad definition. So when you think about overstepping, the question is, are you doing this for personal reasons, for corruption, for payback? That's an abuse of power. But if you are reorganizing the executive branch, if you are saying that you want to streamline or that you want to implement things more efficiently, that is within the power of the President of the United States.
So given what we know about what Elon Musk has done at DOGE and what the president has tasked him with doing, do you think we will see pushback from judges here in the United States that essentially renders some of those decisions moot?
I don't think you're going to see federal judges get involved in bureaucratic reorganization.
Okay.
USAID being run by state rather than the people who are running it. If you are protected by the Pendleton Act, which is our original Civil Service Act of 1883, if you are protected as a civil servant and you are fired without cause, you can go to court and sue for your job or damages. That is something within your purview. Where I think the courts have already intervened is when you refuse to send money out the door from the Treasury or anywhere else that Congress has said must go out the door. So if Congress says we're passing a law, we're implementing it, we're appropriating, we have said this money should go out, and the president effectively impounds it and doesn't spend it the way that Congress intends, that is a constitutionally, that's a challenge, right? You have a standing in court to challenge that. We've already seen one judge say, all right, I'm putting an injunction on that. So there are different ways in which the president can, execute power using executive authority. But when you stop what Congress tells you you must do, then I think you run afoul of separation of powers and you run into federal court.
Wendy, can the president, though, be it Donald Trump or some other president, though, reopen kind of government spending with a new budget or new spending program and say, okay, we're going to, let's reevaluate what we've already said and then let's roll it into a new spending plan and maybe we'll cut back on the old stuff and do that? I mean, can he do that?
So he can take, the president, he or she, but right now it's he, the president can take money that's allocated for a general purpose, so national security or the defense authorization bill, and say, I'm going to build a wall with money that the Army Corps of Engineers was supposed to get. He can do that. because it's all generated for a particular purpose. So you can argue congressional intent is to provide for the security of the United States. I can move that money around. Can he take money from Social Security Trust Fund? Can he take money designated for Medicare or school lunches and spend it on a border wall? That's much trickier, and I think that would be subject to challenge. So within the same functional area or the same department, the president and the secretary, the cabinet secretary do have authority to move money around, but to cancel programs authorized by the Congress, created by the Congress, without Congress's permission, I think that's a bridge too far.
Professor Schiller, just in the last couple of hours, we did hear from the president in the Oval Office. He met with reporters. He signed an executive action where he said he would direct officials to create a sovereign wealth fund for the U.S. We have national debt. We have a deficit. We run a deficit here in the U.S. Can a sovereign wealth fund just be created?
Well, this is the big question mark. I mean, is this tax dollars, or is this sort of something modeled on the private-public partnership that is the Federal Reserve? We just don't quite know yet, but Congress originates all revenues, all taxes, and originates all outlays. So any federal money has to be approved by Congress to move into a completely different function. But if the Treasury Department has investment funds that it already gives to corporations or public entities or anybody else, and they want to consolidate that into a sort of one singular investment fund, if that's already there in the Treasury, then he might make the argument that I'm just moving things around within the same cabinet department. So he's throwing a lot of things at the wall, President Trump, and he's waiting to see what sticks. We just saw that the tariffs are not even sticking on Mexico. You have to imagine there'll be a negotiation with Canada, but these are leverage, and this is what he's trying to do to see how far he can go, not only with executive power, but in terms of carrying out the things that he said he would do when he ran for president.
So I feel like we're all taking a civics course and a history course, courtesy of Professor Schiller, which we are very grateful in real time. But I do have a question then. So with all that we've talked about, is President Trump overreaching, or is he doing what presidents are allowed to do?
So when you say overreaching, I don't think at the moment he is actually overreaching, given the vast power of the presidency that has shifted certainly since 9/11, and it's been both Democrat and Republicans taking advantage of that. But when you give a private citizen who has not been elected, and that's Elon Musk, or confirmed by a legitimately elected body to have access to a lot of individual personal information, that seems to be stretching the boundary to a point where I'm not sure the American people would be comfortable with that.
So you mentioned the expansion of the presidential powers after 9/11. In your view, which president has expanded the powers since then the most?
I'll say I think it's a sort of competition between George W. Bush and Trump in terms of expanding certainly commander-in-chief and international sort of military and economic power. But, Barack Obama through Congress, although, working through reconciliation, which is a congressional tool, created a brand new healthcare program that serves more than 20 million people now. That is a very significant expansion of the federal government. And DACA 1, DACA 2, the Consumer Financial Protection Board, Bureau, these are things that Obama did as well. And certainly Biden has done things, but more of Biden's work has been with Congress to sort of expand the scope of federal investment in private industry, et cetera. That's been more congressional partnership with the presidency, but this is not a partisan tendency. This is a presidential tendency, and all the candidates, all the parties, all the presidents engage in it.
All right, great stuff. Wendy, thank you so much. Professor Wendy Schiller, Brown University Professor of Political Science, joining us on this Monday from Rhode Island. All right, coming up, everybody, on Bloomberg Business Week, we're going to get into the hospitality industry, how one CEO in that group is factoring in or maybe not factoring in those Trump tariffs. We'll see what he has to say. This on a day when we've got equities, Tim, pretty much at their best levels of the session.
Yeah, the Dow in the green up 0.1%, the S&P 500 down 0.3%, the NASDAQ down 0.7%. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, now is a ripe time to buy high-quality commercial real estate names like CBRE Group, D.R. Horton, as President Trump's tariff play sparks widespread market weakness. So says KBW.
Oh, I thought you were giving investment advice.
Not mine. Nope, we don't do that here.
Okay, just making sure.
This was actually today from KBW, singling out companies including Ladder Capital, Starwood Property Trust, also D.R. Horton, and as I mentioned, CBRE Group. So some of those well-known names in the real estate space. Also, Jones Lang LaSalle. We've got a member of Jones Lang LaSalle with us. Let's get to our guest, Kevin Davis, the CEO of America's Hotels and Hospitality at JLL, Jones Lang LaSalle. It is a $13 billion market cap, publicly held real estate and investment management services company. Kevin, right here in our studio. Welcome, welcome. How are you?
Thank you. I'm great. Great to be here.
Tell us about, first of all, we are obviously tariff-focused, the imposition of such against the U.S.'s three main trading partners, Canada, Mexico, and China, although Mexico is on hold at least for a month. What's your exposure specifically, and what impact could these kinds of tariffs have on you?
Well, at this point, it's hard to discern exactly where things will end up. But to the extent that we do have meaningful tariffs with some of our trading partners, the expectation is you could see Americans traveling to foreign countries, a lot of outbound travel, because with the strong dollar, it will be cheaper for them to travel abroad. As it relates to the hospitality industry domestically, it will increase the cost of goods that are being imported. One of the challenges that we face, particularly in the post-COVID environment, it generally costs 30 to 50% more to build new hotels and renovate hotels today as compared to pre-COVID. So there's
That's even before the tariffs.
That's before the tariffs, correct.
Yeah.
So one of the things that we've highlighted in our recent report is that we expect new supply of hotels to be down pretty dramatically. So to the extent that you have tariffs and it increases the cost to build or renovate, it will, again, limit new supply of hotels, which means that if you're an existing owner of hotels, you can be well positioned to take advantage of the future because you'll have fewer competitors going forward. The other thing I would say is, obviously, to the extent
also makes it higher for folks because the supply and demand.
That's what I would say. Yes, the cost will go up, and certainly to the extent it costs more to build and renovate, those costs could be passed on to the consumer.
What about other policies from this White House, specifically when it comes to mass deportations? We've talked about construction labor being a concern given the wildfires out in Southern California. You talk about the cost of building going up.
Right.
What does it do if there are mass deportations, indeed, here in the U.S. to the cost of building in your sector?
Well, it's certainly an issue that the industry is keeping an eye on. I would say that things continue to evolve and develop. So it's hard to say at this point what the implications will be, but it's certainly labor has been a major issue for our industry, particularly post-COVID, and it is something that we're incredibly focused on.
Would you be someone who would be a supporter of, if you could, I don't know, maybe you have already, you and your team reached out to the White House, but some kind of immigration law, legal immigration law that allows for workers, be it within the hospitality space specifically, like we have for tech
Right.
workers that come in on various visas?
We have an incredibly articulate trade group that we work with that will generally express the wishes and desires of the industry. So we typically will work through our trade group in order to express opinions.
So are they pushing for something like that?
I don't know specifically what they're doing right now, but
Okay.
But again, we work with our trade group there.
Do you find that that labor remains a challenge in all parts of hospitality right now, or where is it not a challenge?
Yeah, it's certainly gotten significantly better. I mean, you look back 21, 22, we had severe challenges with labor. The labor situation has improved, but in some markets, it continues to be challenging.
You're talking
So
some markets.
It's going to be market specific.
Market specific geographically, or market specific in the sector of hospitality we're talking about?
More geographically.
So where is it an issue?
I would say a lot of the urban areas we continue to have challenges, but also there's some smaller Sunbelt markets that have challenges. I mean, it's an issue. Again, it's been an ongoing issue since COVID. It's gotten better. But again, it's another issue that we continue to keep an eye out.
Hey, Kevin, got just about a minute or so left here, and we apologize with all the news going on. We got squeezed a little bit. But having said that, what kind of demand is there in the hospitality space? What kind of properties? Is it higher end properties? Is it middle? Like, give us an idea.
Yeah, so it's interesting. We continue to see demand increase, which is great. And it's increasing in luxury hotels. And we've also seen, I'd say, luxury in middle scale, middle tier hotels.
So how much a night? Like,
has increased. It's really going to depend on the market. I would say that generally mid-scale and economy hotels, which appeal to sort of down the middle class and some lower income consumers, those sectors have fallen off, particularly with higher interest rates. That's affected some of our lower income consumers disproportionately. So as a result, some of the hotels that they would, classes that they would typically frequent have had some challenges with demand.
so it's higher end. That's where you're seeing the demand.
Higher end.
Or luxury properties, if you will.
Luxury continues, scale, upper upscale and luxury, which generally tends to be higher end, continues to be on the positive.
Let's stay in touch. Thank you so much.
Thank you so much. Appreciate it.
Kevin Davis, Chief Executive Officer of America's Hotels and Hospitality at JLL, Jones Lang LaSalle here in studio. All right, that's going to do it for this hour of Business Week. For those watching on TV, the close coming your way. Tim and I continue on Bloomberg Radio.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Matt Piper. President Trump is about to get on the phone with Canadian Prime Minister Justin Trudeau. It's tariff talk, as 25% tariffs are set to go into effect at midnight.
Canada is very tough. They're very, very tough to do business with.
This woman lives in Ottawa.
Trump's pulling his moves? Absolutely, positively not. I just hope that the Canadian government bully him right back, because that's all he's doing.
Tariffs have been paused for Mexico, at least for now, as our Weijia Jiang reports from the White House.
Mexico has agreed to do more at the border, to send in more of its guards at the southern border to ensure that there is a decrease of migration. Of course, all of this is a political tool that the president has used many times to try to get other countries to align with his goals. And of course, the border is among his top priorities here.
We are learning that congressional Democrats have been denied entry to the U.S. aid building as federal police are blocking the doors. USA! Protesters outside the D.C. building there after staffers were instructed to stay out of its headquarters. Secretary of State Rubio, who says he's in charge of it, says it's supposed to help fund humanitarian efforts worldwide, but
it's a completely unresponsive agency. It's supposed to respond to policy directives of the State Department, and it refuses to do so.
Venezuelans in the U.S. are on edge after the Trump administration moves to end protections for them.
A new government order seen by CBS News is telling 350,000 Venezuelans in the U.S. that they stand to lose within 60 days temporary protection status that had been issued by the Biden administration. It means they'll not be able to work in the U.S. and could be deported by ICE agents. President Trump has said Venezuela's government has agreed to accept its deportees from the United States. Steve Kathan, CBS News.
Hurricane Helene hit North Carolina hard in September, and Governor Josh Stein is asking the state legislature to approve more than $1 billion to help people rebuild.
With these funds, people can get to assessing the critical integrity of their homes, hiring contractors, and paying for building supplies.
Spanish soccer forward Jenny Hermoso has testified at Luis Rubiales' trial in Madrid that she did not consent to being kissed by the country's former top soccer official after winning the 2023 Women's World Cup. Rubiales is accused of sexual assault and trying to coerce Hermoso to publicly support him after the incident seen by millions. Rubiales could face a fine or a prison sentence of 1 to 4 years if found guilty. The Dow is up 10 points. This is CBS News.
loans for real people.
A new Bankrate survey finds nearly half of loan applicants have been rejected over the past year.
It's a tight credit market, and lenders are getting pickier about who they approve for new financing. Bankrate analyst Sarah Foster says people with excellent credit scores aren't having problems.
You know, those Americans at the bottom end of the spectrum, low income, lower credit scores, they're the ones who are having the toughest time.
The Federal Reserve has cut interest rates by a full percentage point in recent months.
But that's really not helped Americans get access to credit any easier.
Michael Wallace, CBS News.
Barbie Zhu has died. She starred in the popular TV drama Meteor Garden that once swept Asia. She caught the flu when she visited Japan with her family during the Lunar New Year, says her younger sister. Zhu died after contracting pneumonia triggered by the flu. The news about her death has been trending in her native Taiwan as well as in China. Barbie Zhu was 48 years old. Matt Piper, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we've got 55 minutes to go until we wrap up the trade on this Monday, February 3rd, the first trading day in the month of February here in the United States. Carol Masser along with Tim Stenovec live here in our Bloomberg Interactive Broker studio. We are on radio, we are on YouTube, we are on Bloomberg Originals. And man, go back to 9:30 this morning, a very different trade here in the United States. But right now, we are near our highs of the session.
Yeah, seeing some green on the screen for the Dow, the S&P down 0.4%, the NASDAQ down 0.8%. Charlie's going to be with us in a minute. He's going to give us some more details on the trade. Speaking of the trade, see, it feels like a trade war, or at least the beginning of one.
It does. And John Authors, who has gotten himself comfortable here in our studio, we're going to go to him in just a moment. He joins in on his view in just a moment, and it's, quote, stupid. So
John's
we're going to ask him why.
John's
words. But
yeah.
we're going to ask him about this story.
Hey, we're also going to speak to the head of economic development for the state of Louisiana. It relies quite heavily on Mexico, Canada, and China for trade. Oh, and there's also the whole Super Bowl happening this coming weekend, which will have an economic effect.
Oh, that little thing. Also, we're going to get into how CEOs are feeling about these first 2 weeks of Donald Trump's second term in the White House. Richard Edelman, the CEO of the global communications firm Edelman, stopping by. He was in Davos. He is constantly talking to CEOs of companies, so we'll see what he has to say a little bit later on.
All that and more coming up over the next 2 hours right here on Bloomberg Business Week. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pelley.
Hi, thank you very much. Good day to you both. We are awaiting any new tariff developments because right now President Trump is scheduled to be on a phone call with Canadian Prime Minister Justin Trudeau. They are talking tariffs. Earlier today, Trump agreed to delay 25% tariffs against Mexico for 1 month after a conversation with his counterpart, Claudia Sheinbaum. The Dow is little changed right now, was higher just a couple of minutes ago. The S&P 500 index has trimmed most of a slide that earlier approached 2%. Right now, the S&P is down 0.4%. Dow Industrials down 8 points, just about flat on the day. NASDAQ down 0.8%. 10-year at 4.54% with a 2-year that's currently yielding 4.26%. Spot gold up $18 the ounce, 28.17, up by 0.7%. And West Texas Intermediate crude now up 0.8%, 73.12 for a barrel of WTI. Well, certainly Trump tariffs being felt among chip stocks. Case in point, NVIDIA down now by 2.3%, Broadcom down 1.4%, Qualcomm shares down 0.8%, and Applied Materials lower now by just about 0.3%. And again, recapping the Dow, now trading lower. We've got the Dow Jones Industrial Average down 7, S&P, to put it in context, lower by 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. And thanks for the update, too, on the tariffs. A lot of moving parts when it comes to these tariffs. We are going to bring you the headlines as soon as they do cross. What we do know is that President Trump agreed to delay 25% tariffs against Mexico for 1 month after a conversation with Mexican President Claudia Sheinbaum. Earlier today, it was a dramatic turnabout with the neighboring nations on the brink of a trade war.
It's when the market turned around as well.
Oh, it's absolutely when the market turned around. Though it does remain unclear whether Canada, which is also facing the threat of 25% tariffs on most goods, we'll be able to reach a similar deal with Washington. We do await headlines from the White House on that.
We do indeed. If these tariffs do get implemented and they are sustained, our next guest writes, he's not guest, he's family. Our next family member writes, then the quote, this is the quote he says, the longer-term consequences for the global order are profound. John Authors wrote those words in a column this morning. He is columnist for Bloomberg Opinion, and he joins us here in our Bloomberg Interactive Broker studio. You can read his column, by the way, on the Bloomberg and at OPIN Go on the terminal and at Bloomberg.com/opinion. All right, John, so get to it.
Right.
So they could be profound, but...
Yes. This is the biggest increase in tariffs by an economy of the dominant economy in the world in almost 100 years since Smoot-Hawley. So this is, if it actually happens, an immense deal. We don't need to get into the fact, there's been a trade agreement, a very firm trade agreement between these three countries for 3 decades, revised and signed by Donald Trump, whatever it was, 6 or 7 years ago.
Yeah, the USMCA.
So, the whole sense of a trade order underpinning the world is, terribly, grievously damaged if this happens. The point I wanted to make this morning when I've had almost no pushback. You normally get quite a lot of rude comments whenever you stray anywhere near the political, naturally enough.
You mean when you post your column?
Yes, and I've had no pushback at all to my saying, it doesn't matter. Trump won with a mandate to do tariffs. He's won with a mandate to peel back globalization. It's plainly what people want. The reason the markets don't like this is that it's stupid. There is just no good reason to start with Mexico and Canada. The real absurdity is that the alleged reason for doing this on Canada is to do with fentanyl and immigrants.
Well, let's talk about both of those things. And
Yes.
We'll start with the fentanyl element here. We heard the president talk about this just this afternoon from the Oval Office, and he talked about fentanyl, his words, killing hundreds of thousands of people a year.
Well, it's
here in the
obviously a
United
very,
States.
very serious problem here in the States. The figure I've seen is that last year, 43 pounds of fentanyl were caught coming across the border from Canada. The number for Mexico was somewhere north of 20,000.
So 43 pounds coming from the northern border.
Yes.
Our border with Canada.
Compared to something
more
like
than 20,000 pounds coming from Mexico.
So, I would stick with what I said in my column, which was that if you were going to come up with a list of 100 policies to help you deal with this fentanyl scourge, putting tariffs on Canada wouldn't make the top 100. It's just got nothing to do with the problem at all. If you want to get onto immigration, apparently more people tried to move illegally from Canada to the US, from the US to Canada than from Canada to the US. So if that is an issue, it should be Canada threatening tariffs on the states. This is just absurd. There is no. If the stated reasons for doing this are ridiculous.
Well, if you think the stated reasons for doing this are ridiculous, what do you think the reasons are that are not stated for doing this?
That is what's baffling, because we've had a pretty minor concession from Mexico on the general issue of fentanyl and the border.
10,000
and
troops
we've got a
being
month's
sent
delay.
there.
I mean, there are 60,000 members of the Mexican National Guard. It was a group that was brought together, created under Lopez Obrador. There's no suggestion of hiring new troops. These are people that Mexico is already paying that they're going to move to the border. I've been looking through the Mexican press. I covered Mexico for several years when I was younger. That isn't the headline at all. It isn't, oh my God, we're going to be mobilizing all these people to go to the border. Can we do this? That isn't the story at all. That is the fig leaf that somehow or other Donald Trump accepted to stand down. That makes it very hard to work out what he's going to do with Canada, where Canada can't make any concessions on its fentanyl problem because it doesn't have a fentanyl problem. It's very hard to be polite about this. This is just ludicrous.
So what do you make of then the kind of tapering back a little bit in terms of Canadian energy, right, to only a 10% tariff? Like, is that logical? Does that show something else within what President Trump is trying to achieve?
I've heard two arguments about that. One is that he's listening to people who are pointing out we currently get a huge amount of crude from Canada, and putting tariffs on that is bound to increase gas prices in this country for at least for a while until they work out alternative supplies. The other argument, though, is if he's prepared to put tariffs on Canadian crude at all, knowing that in the short run it increases gas prices, which we have all now decided was an absolutely toxic prime reason why Kamala Harris or Joe Biden never had a chance in the election last year, that really does suggest he doesn't care. He just really, really, really wants to impose tariffs.
Right, because Trump was saying on the campaign trail, like, I'm going to fight inflation. I'm going to bring prices down. I'm going to make things cheaper. And now that move doesn't speak to that.
It would appear that, I mean, he has a mandate to keep prices down, and he has a mandate to peel back globalization. And they do, I mean, politicians get elected on aims that don't necessarily go together all the time.
Yeah.
The one good thing about globalization for the States was that it kept inflation down for a generation. All those cheap goods from China meant that inflation stayed very nicely under control for a while. So there is naturally a conflict between those two objectives. And it would appear that if he has to choose between them, he's going to be peeling back globalization rather than putting all his weight down on inflation. That's his prerogative, but that seems to be his order of priorities.
We do know that the president wants to see more manufacturing in the U.S. He wants to see jobs that were shipped overseas in the 90s and 2000s back here in the U.S.
That's a very real issue, yes.
Can that happen as a result? When we saw nearshoring, we saw a lot of Chinese companies build factories in Mexico.
Yes.
It didn't necessarily achieve the aim that he wanted the first time around.
Well, that is a fascinating and very important issue, which if he was going to start a big consultation paper and announce that this was a critical issue in the USMCA renegotiation, which has to happen next year, all of that is, I wouldn't dream of describing that as stupid if that was the issue, because it's an absolutely live, important economic issue. Fascinating points to be made on all sides. The point is that if the issue is U.S. security, which as I understand it is legally, it has to be about U.S. security.
In order for the tariffs to be constitutional?
Then that shouldn't arise. It shouldn't come into it in the slightest. Whether it's a Chinese company or a Mexican company that owns a factory has no bearing at all on whether fentanyl comes across the border or whether Mexicans are more likely to try to cross the border.
John, we only have about a minute left here. There's America First policy. There are folks that would argue, and probably rightly so, that China has been on a China First policy, right? I mean, this is what countries do. But in doing so, could it mean that ultimately other countries will turn away from the U.S. and not be interested in the U.S. market anymore? And forgive me, you've only got about 45 seconds.
That is the great risk. It's certainly fair to say China adopted mercantilism before the Americans did, and to some extent, if China is going to behave like that, then it's only rational for America also to behave like that. But yes, it's been a great benefit to this country that the US consumer has been driving global growth, and that lots of people have been trying their hardest to sell things to Americans. It helps American living standards. If you're going to put a tax on that and make it more expensive to do, they're less likely to do it. They're more likely to spend time building up their own economies and trading with each other. And you move to a balkanized world where people are less likely to send money here.
Right. Goes to the investment ideas, right?
Of other money for the sovereign wealth fund, and that's terrible.
That was the opinion of John Authors. John Authors, thank you so much. He is columnist with Bloomberg Opinion, joining us here in studio. This is Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. The S&P 500 index has trimmed its losses after President Trump agreed to delay 25% tariffs against Mexico for 1 month. And he is on the phone right now with Canada's Justin Trudeau. We've got the Dow down 9, little changed right now. Again, the S&P, to put it in context, down 4, dropped there of 27 points, above 6,000, 6,013 on the S&P, while NASDAQ is down 148, down 0.7%. The 10-year at 4.54%, the 2-year 4.26%. Gold is up $19 the ounce, 28.18 right now, up 0.7%, while West Texas Intermediate crude is up by 0.6%, 72.95 a barrel. As for tariffs and the market reaction, Dana Dioria is co-chief investment officer at Investnet.
Obviously, to a certain extent, the market had priced this in, or at least the possibility of it. I think the Trump administration demonstrated within the first few days that much of what they talked about doing, they were going to do, right? And so all these executive orders that you saw happen literally first days of, Trump's presidency. So I think to a certain extent, the market was already, anticipating some of this.
Dana Dioria of Investnet interviewed this morning on Bloomberg The Open. We've got automaker shares under pressure. Right now, General Motors on tariff concerns down 2.7%. Ford down 1.3%. Stellantis, the parent of Jeep and Chrysler, lower now by about 3.6%. Again, recapping, U.S. stocks lower. S&P down 29, down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, we've talked a lot about the big numbers when it comes to the tariffs that Trump has announced. The big picture, tariffs on Canada, Mexico, and China will affect trade worth about $1.3 trillion. But to get an idea of how it affects states, it's important for us to drill down, to get an understanding of it on a different scale. For example, according to the USTR, Louisiana's largest export market in 2023 was China, accounting for 14% of the total goods exported from the state of Louisiana. The next biggest, Mexico. And Canada also features prominently in the state's economy. The USTR saying that Canada, Carol, is a, quote, major source of foreign investment in the state.
Right. When we start to break it down, you get really an understanding of how it impacts, the government overall, but really how it impacts states and certainly cities.
So let's get an idea of how the state's economic chief is looking at things. Susan B. Bourgeois is Economic Development Secretary for the state of Louisiana. She joins us from New Orleans. Secretary, good to have you with us. We originally booked you to talk about the economic impact of the Super Bowl. We are going to do that. We're going to get there. But first, how are you looking at a potential trade war with our biggest trading partners?
Well, good afternoon, Carol and Tim, and thanks for having me. And I do hope we have time to get to the Super Bowl and the opportunity that means for Louisiana. But clearly, with what's happening in the world, it's the kind of thing we pay attention to, as do you and a lot of other people. But I feel like first and foremost, it's really too early to speculate on where any of this lands, today being a great example of how this is sort of changing moment by moment. And so to speculate on exactly where the outcome of all this lies, I think we would all be prejudging the situation. But I will say, Louisiana has a pretty remarkable position in federal leadership right now, between our Speaker of the House and the Majority Leader both being from Louisiana. Our governor's relationship with the president, we're in constant contact with our federal partners, and make it continually really clear to watch this process evolve and what it would ultimately mean for Louisiana. But I will say, in the larger picture conversation, in the larger picture of the whole tariff conversation, I'm confident that any solution that is good for America and good for American businesses ultimately is good for Louisiana and Louisiana's economy. American manufacturing, bolstering American manufacturing is good for Louisiana's economy. Those kinds of things are what we're good at. And I will say, we've had lots of interest, even, phone calls coming across my desk just in the last few weeks of some foreign partners who we have historically done some work with, who are now interested in bringing some manufacturing to Louisiana so they can do that work here. So I think there's opportunity for this to settle out in a way that it is, in fact, not harmful to Louisiana's economy, but ultimately a good solution for America and good solution for Louisiana.
Do you think those calls from those foreign businesses that you mentioned are a direct result of the tariffs or threatened tariffs from the Trump administration? Do you think they would have happened?
Sure. I think the tariff conversation obviously has taken place before the election itself. The governor and I were in Korea a few months ago. In fact, it was the week before the election, and there was lots of conversation about it then. What do you think will happen, and what's some positioning? I think we would be naive to think that countries haven't been paying attention to this and perhaps positioning for it. So in the event it were to happen, I don't think my phone has blown up in the last 2 weeks purely because of it, but I do think this has been a conversation that's been around for a few months now. And again, I think there are people paying attention to it. I don't think anybody's making a move one way or another based on something that at this point is still very speculative.
It does sound like, to you though, it does seem like this could be you view this as a net positive.
I believe it can be a net positive, absolutely. I think, again, at the end of the day, I think if we are repositioning the American economy to have a reinvention, reinvigoration, if you will, of American manufacturing, Louisiana has been incredibly good in the manufacturing space, in the energy space for a very long time. And I think at the end of the day, Louisiana has a real opportunity here.
Hey, one thing I wanted to ask you, Robert Lighthizer, who was Donald Trump's top trade negotiator in the United States during his first term, he has talked about China being an existential threat to the United States. I am just curious how you see China and the relationship of what the U.S. needs to be with China. Is it an existential threat to the United States?
I don't know enough about I think it would be foolish to have me comment on national security. But what I will say, in Louisiana, we approach any project that comes across our radar that has a relationship with a Chinese business or any Chinese government interest very carefully, very thoroughly, and the governor gets involved at that level very quickly to determine if it's a project we even want to pursue. I think we would be naive and foolish to do it any other way. So I am not expert enough to claim existential threat, but I will say it's something we pay very close attention to in Louisiana.
But one thing I will say, and we love talking to governors, to mayors, to really get an understanding of what happens in our states, on the ground. And so what is it that you think Americans need to understand when it comes to economic development in the United States, in our cities, and the role that international alliances play in that?
Yeah, I think international alliances and international relationships feed a great deal of economic development nationwide, needless to say. But when you look at a state like Louisiana, and the opportunity and the position that we have, the global position that we have at the mouth of the Mississippi River, the history and the experience in the energy world, the history and experience in the manufacturing world, agriculture, you name it. It is certainly, any international relationship is one for us to pay attention to. But I don't think anyone in Louisiana would say the economic relationship to a specific company or specific country, for that matter, outweighs the importance of national security and what's good for American trade practices, American businesses. I think there's a real logical balance of that. I think Louisiana understand that.
Okay, well, speaking of American businesses, there's perhaps nothing more American than football. At least football,
sure.
With your hands.
I was going to say, be very careful
football,
when our Brit colleagues are here.
Yeah.
Right.
We can get into a little bit
although
of a battle.
Increasingly, the game of football is going international, as we have seen over the last few years.
True.
But the Super Bowl, it's being played in Louisiana, coming this weekend in New Orleans. How are you thinking about the economic impact? Give us some numbers here. Just how big of a deal is it to have the Super Bowl in your home state?
Well, I love that you said that the Super Bowl is being played in Louisiana, because of course it's being played in New Orleans, and we love New Orleans. We love the city. We love everything that it provides. But we are really treating this as Louisiana's Super Bowl, because not only because of the economic impact, but because of the opportunity it has to have the 150 million eyes, right, that watch this game on the state. And so the economic impact is really, it is dramatic, but we view it through a lens that's not just dollars. There's been a real focus since I've been Secretary of Economic Development under Governor Landry, to change the narrative about Louisiana. And when you were talking about the kind of national and international attention that is going to be paid to the city, the state, and this game in the next 7 days, we are seizing the opportunity in really creative and bold ways And so it is an incredible showcase for us to be able to begin to tell that narrative change story.
It's got to
New Orleans is.
Can I just say, it's got to feel amazing considering I remember being in New Orleans shortly after Katrina and just the build back and just kind of where you guys are. And I don't know, that moment of, rebuilding for the people who were there, but then also thinking about the way back for New Orleans, the city, but also Louisiana, the state, and what you guys are doing, and then in hosting the Super Bowl, how it all fits in.
Yeah, absolutely. It's while we've been around the Katrina rebuild for 20 years, right?
Yeah.
Anybody who's from Louisiana has lived it, and in some ways it feels like a lifetime ago because of the change in the city and the state. But truth be told, this is New Orleans' 11th Super Bowl. We're tied with Miami for the most Super Bowls ever held in a city. And we're not, we are not a huge city. We're a strong mid-sized city, and so we are just incredibly well positioned because I think anyone who's been here, Carol, you said it after Katrina, but the culture, the people, the feel, just sort of the emotional tie that this city has to people when they experience it either as a visitor or a resident. And so to watch both, a rebuild and a reinvention, but then also, in the last really 12 months, there has been a very aggressive push to change that whole reinvigoration and reinvention to Louisiana on a more statewide level. So it's been amazing to watch. And obviously, I've been privileged to be able to be a small part of it. But, I'm born and raised in New Orleans, spent some time outside of the state, but it's in your blood, and Louisiana's in your blood. And I love that the eyes of the world will be upon us for the next 7 days so we can showcase that.
Madam Secretary, what can you tell us? We've just got about 45, 50 seconds left here. When it comes to development, the health of states, where's development coming from? You've got, the Meta, massive data center that's coming in. You guys, your energy exposure, there's renewables. Where is money really going to at this point? What is it? What can you tell us and share with us on that front, just quickly?
Yeah, Carol, you just sort of named it for me. I appreciate that. But, at the end of the day, when you have somebody like Meta saying, we're going to build our biggest AI center in the world in your state, in North Louisiana, in a parish that is historically rural, historically agricultural. They're investing in innovation in North Louisiana, to all the energy opportunity that has long existed across Louisiana, and not just the oil and gas industry, which we are proud of and will claim, but also the opportunity to respond to the world's desire for renewables and decarbonization. We're incredibly well positioned to take advantage of those two sectors. And then when you link bioinnovation with our agriculture and the other pieces that we have, we really sort of have a perfect storm, no pun intended, to really turn those legacy issues into a strong future.
Got it. Hey, 5 seconds. Chiefs or Eagles? Make the call.
Nope, not a chance. Louisiana.
I hear you. All right, Susan, thank you so much. Susan Bourgeois, she's Economic Development Secretary of the state of Louisiana, joining us from New Orleans.
What do you think, Carol? Chiefs or Eagles?
Chiefs.
Yeah?
Yeah.
Oh, okay.
I can't go for Eagles. I'm from New Jersey.
All right, I won't tell Elizabeth.
Sorry.
This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all trading lower. Let's get the latest now as we head over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. It's all about the tariffs today, with stocks bouncing off their lows on reports that Mexican tariffs have been delayed by a month. The Dow is currently down 47 points, was down 665 points. S&Ps are down 33, while the NASDAQ is still down by 0.9%. The U.S. 10-year yield is at 4.54%. Gold is up 20. Oil is in the green. And Bitcoin, that's higher by 5%. Among the main 11 S&P sectors, leaders were consumer staples and healthcare. Tech and consumer discretionary were under pressure. And leaders to the upside in the Dow, IBM and Procter & Gamble, while Apple fell 3% and led to the downside. In other news, Trump to sign a measure to create a sovereign wealth fund. And wrapping things up, some of the names pointing after the bell tonight include Clorox and Palantir. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAK, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 18 minutes left to go before we wrap up the Monday trading session. And as you just heard from Charlie and Bill Maloney, you've got stocks just rolling over their best levels of the session, still down across the board on your major equity averages, but a very different picture from what we saw at the open this morning. And if I look at the S&P 500, let me just pull it up here on my Bloomberg, you've got 179 names to the upside, more names as you would expect, 324 to the downside. So we definitely see more of a risk-off trade, no doubt about it. Volatility, as we heard from Gina Martin-Adams, it's back.
Hey, volatility, probably a result of what we're seeing play out when it comes to what I think many would call a trade war. I want to see what Patrick Frizzetti has to say about it. He's managing director and partner at Rose Advisors. He joins us here in the Bloomberg Interactive Brokers studio. Patrick, welcome. Good to see you. A different trade than we saw earlier in the session. We're still waiting to hear what the call from Canada's Prime Minister Justin Trudeau leads to. We saw some reversal in the morning. How do you read into today's action and also the trade war?
Well, thanks for having me. I would say one thing is clear. We're in a new normal when it comes to the financial news cycle, when you have, I think, consistent moves.
Is it a new old normal?
A new old, yeah.
Okay.
A new old, I think that's fair. But when you think about, the one thing that's clear, when it comes to trade, the Trump administration prefers bilateral over multilateral, and they're willing to use economic tools for non-economic goals. And here, obviously, he ran on a platform of immigration, containing immigration policy. And if that's the goal here, is to control immigration and, obviously add on to that narcotics and fentanyl coming into the country, this has been his approach. But I heard someone use this old Chinese idiom earlier today or over the weekend, and it was killing chickens to scare the monkeys. Mm-hmm. And if the U.S. is willing to put this pressure on their closest and friendliest allies, then what does that mean for the rest of the world? And so when you think about trade war, clearly there's an inflationary element to it, and I think we're going to continue to see it. And no one should really be. I'm not that surprised. Maybe I'm surprised at a 12-hour turnaround, particularly when it comes to Mexico. And maybe we'll see the same thing out of Trudeau. If we don't, people may chalk that up to being political, right? Trump doesn't get along with Trudeau.
I think a lot of people would hear what you're saying and say, I guess it makes sense for 25% tariffs, if indeed it is to control immigration and fentanyl, for that to be on Mexico.
Right.
But those two things, as John Authors pointed out in his column today for Bloomberg Opinion, those two things don't apply to Canada.
That's right.
When you get less than 50 pounds of fentanyl over the border,
that's right,
each year, whereas over 20,000 coming from our southern border.
And that's why I think that statement applies, is that he's just willing to, use it as an excuse to put pressure on his closest neighbors. As maybe it's a negotiating tool, perhaps. Clearly, it's to fight immigration as it relates to Mexico. But you're exactly right. I mean, when you look at the numbers, it's so different. With I think you said under 50 pounds of fentanyl, and it was over 21,000 pounds at the southern border. Same thing with immigration, by the way. Detainees, it was just under 24,000 detained in fiscal year 2024 at the northern border, and that's 1.5%. The rest is on the southern border, over 1.5 million. So it's vastly different. And so to apply these pressures, I think it's more symbolic than anything. And maybe in part because it's political, let's be honest. Trudeau sort of in his, lame duck days, perhaps the last, shot, across the bow to some degree. But it's really because Trump wants to put in effect what he said was one of his priorities on his campaign trail, which is immigration.
So, Patrick, how do you then advise people who want to invest in this market or already have money in this market and are trying to figure out, am I in a good place? Maybe it's not even about returns, but it's also about, minimizing any kind of downside at this point. So the VIX popped up a little bit today, certainly not to some levels that we've seen in other moments of turbulence and volatility. So what's your advice to investors in this environment?
Well, if you have a plan of action, have had that plan of action, since last year, then I think you can very much follow a course that you set in place. What I did with clients in the middle of last year.
But if we end up having tariffs that are longer.
So if you have you always have to look at who the beneficiaries of that are. Again, one thing I've been saying is nearshoring, onshoring has been a theme of ours for over a year now. And if you think of a deglobalized world, who are the beneficiaries of that, right? And so if tariffs continue, that can, without a doubt, put recessionary pressure. I mean, that definitely comes into the mix. I think in a place like Canada, you'd probably definitely see recessionary pressure even sooner. That would be an indicator of potentially what's to come. I mean, 80% of
what's to come for the U.S.
What's to come for the U.S. 80% of the economy in the U.S. is service-oriented, right? It's a service economy, okay?
Right.
The other 20%, you'd say, okay, it's hard goods, manufacturing, et cetera. Right. But that creates an enormous amount of volatility in the economy, that 20%.
Why is that? Is it because if you have less money as a result of paying higher prices for that 20%, you spend less on services? Is that part of the equation?
I think it's part of it, but also, there's a particular investment, I would say, when it comes to manufacturing a good, right? There's an entire supply chain. When it comes to services, it's not quite the same supply chain, right? So you think of capital that you need to spend on it. And it's not, it's not, one for one, but over time, I think you see why the economy is more fragile or more sensitive, rather, to that 20%. We continue, those type of headlines tend to rock the markets, and if you start to see it pour over into the bond market,
right?
The first thing this morning was, the bond market is much more accurate than the stock market. Let's be honest, you guys cover this stuff for a living.
Yeah.
The bond market moved maybe 2 or 3 basis points this morning, and so you say, okay, what's the read through here?
Right. And the sensitivity. So, all right, just got about 30, 40 seconds. So are you telling most of your investors to sit tight? Are your investors calling you and saying, I'm a little nervous here?
Yeah, there's always some concern. I think there was some concern with the new administration. What kind of policy? What impact would this have for me? I mean, we preach having a balanced portfolio. So if you have some fixed income, that makes sense.
Shorter duration?
Yeah, short to intermediate duration.
Yeah.
I think having a balance too. I mean, we've been long precious metals for 3 years now, offsetting some of the equity risk with precious metals, having some commodity exposure, right? It's preparing for those unknown situations, right? And this, like I said, this is the new old normal, you said. I mean, we're going to continue to see that, and that could create.
Do you feel more confident this year about the investment environment than you did last year, or no?
I feel better about it.
You do?
Yeah, because
we're optimistic.
Yeah, I just feel better about it. I feel better about it. I think managing money in this environment is.
We got to run. You're optimistic. Patrick Frizzetti over at Rose Advisors. This is Bloomberg.
listening to Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, we've got 7 minutes to go until we wrap up the trading day. We're going to head over to our TV colleagues in just a moment. We're going to count you down to the close. We also have some earnings coming your way, including Palantir after the closing bell. Clorox also coming out, NXP. So we're going to break them down and bring you market reaction. In the meantime, do we want to go here?
Yeah, we want to go there.
All right, some booing going on?
Yeah, did you hear about this?
No.
Okay, so from the rocky shores of Newfoundland to the towering forests of British Columbia, Canadians have an unfamiliar feeling growing inside them. They're angry.
Very, very angry.
U.S. President Trump's decision to impose 25% tariffs on most imports from Canada has provoked an uncharacteristically fierce reaction from the country's mild-mannered citizenry, and we saw that made clear in a recent game when the Star-Spangled Banner was drowned out by jeering fans in Ottawa and an NBA game in Toronto.
Yeah.
So an NHL game in Ottawa and an NBA game in Toronto.
Social media was flooded with calls to boycott U.S. products as well. The ire didn't end there. Some so-called snowbirds have said they plan to put their winter homes in sunny Florida on the block.
Where are they going to go to be warm?
There are other places, I guess. Caribbean.
I guess. It's far.
Mexico.
Yeah.
Not as
just bypass the entire U.S. maybe
do
maybe
a
a good
hop.
marketing thing would be for them, for an airline to, do a tariff special.
Maybe Elon, when he's not too busy with the other stuff, could do a tunnel through the United States that goes straight to Mexico for Canadians.
Well, you did see
Just saying. Having some fun
the
here.
Starlink news, right? So I'm just pulling this up on the terminal because I want to make sure. Ontario canceled Starlink deal and barred U.S. firms from contracts. Ontario's premier said his government is ending its contract with Starlink. It's the Elon Musk-controlled satellite company following U.S. President Donald Trump's EO to impose tariffs on goods imported from Canada.
You've seen this in China, right? We've seen pushback against American-made products and so on. You see this, but it's interesting to see this happen so quickly. This story that's on the Bloomberg terminal cites one digital media consultant in Toronto, has a website listing goods made in Canada, and is saying, buy Canadians, for Canadians, spend your money wisely. And this is a site that has suddenly become popular. I'm not quite sure what it's called. Yeah.
Well, I do want to remind everybody, we don't have the information about what was discussed on the call with Prime Minister Justin Trudeau and Donald Trump. We did hear from Caroline Leavitt that the call began in the 3 o'clock hour. She did say on Fox News that also that Musk is a special government employee. So some headlines from that interview on Fox a little earlier.
I think what's been interesting is, these are the three biggest trading partners for the United States, and we're talking about Canada, Mexico, and China, of course. We've already seen a suspension for at least 1 month in terms of the tariffs against Mexico, so we're waiting to see how that plays out. We'll see what happens with Canada ultimately. Our reporting, talking with our Sean Donnan earlier, is that it's a reminder that just in these first 24 hours or so in expectations of these tariffs, we've already seen a slowdown. So we'll have to wait to ultimately see what happens here in terms of tariffs. But the markets, the sensitivity on the expectation that these would be imposed or they were imposed, we saw markets sell off certainly at the open, and we saw it play out in other asset classes. And then as soon as we saw maybe, okay, with Mexico, that it wouldn't happen at least for another month, that there's some negotiating, it sounds like, going on, we saw markets here in the United States, equity markets I'm specifically talking about, rally again.
Well, speaking of equity markets, we are off our best levels of the day, just slightly. The NASDAQ still down more than 1%, down close to 1.2%. That's the NASDAQ composite. The S&P 500 down 0.7%, and the Dow, which earlier in the session did ever go so slightly into the green, is down 0.2%.
Yeah, exactly. So we have seen quite a turnaround, some volatility. We saw the VIX kick up just a little bit. But again, we're seeing most names in the S&P 500 still lower. So some concerns about ultimately how this plays out. And if we do get tariffs, maybe how long they last. And all of that will determine the impact on specific companies, specific sectors, and ultimately the U.S. economy. So do not forget, though, we're in earnings season. We're going to be breaking some big ones down, including Palantir after the close. Do not go anywhere. Over to our TV colleagues we go, because the closing bell starts right now.
We break down all of today's market action in our global simulcast that starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, taking you through that closing bell, a global simulcast. It starts right now. Scarlett Fu in the TV studio, Carol Masser and Tim Stenovic in the radio booth, as we welcome our audiences across all of our Bloomberg platforms on yet another Manic Monday.
Yeah, absolutely. Perfectly said. And it just shows the sensitivity to things coming out of the White House. And certainly,
by the way.
The Bengals.
Yeah.
The Bengals. I think what's interesting is that you did see selling right at the open, understand because of the tariffs. And then as things rolled back, at least for Mexico, at least for another month, it just shows again how hypersensitive investors are about all of this.
Yeah, I mean, I wonder if we get
understandably
we get any information when we get information about Canada and the call that the president has had with Prime Minister Justin Trudeau, how that changes the picture, given what we heard from President Sheinbaum of Mexico earlier in today's session, and the way we saw that reversal after that information came from her, that the U.S. had held off for a month.
Yeah, well, I mean, there's a lot of like wait and see moments right now. But what we can say is that a lot of people are flocking to safe havens. Certainly, if you look at the S&P 500, you see that in the sectors that are gaining, and also gold prices are higher as well. And Treasury is getting a little bit of a lift.
Just in that back end. But what was interesting, last week, JP Morgan Trading Desk said they saw a lot of retail buying, and we did see a buy the dip scenario today. I mean, remember futures yesterday? You look at that intraday chart of the S&P minis for the futures, and I mean, that was a huge dip that we've come back from.
Yeah, a little bit of a repeat of what we saw last week, of course, after that deep seek scare. We should point out we do get some earnings after the bell from Palantir and NXP Semiconductors, as well as Clorox. As for the market moves today, we're well off the lows of the day, but still in the red, with the Dow Jones Industrial Average lower by more than 100 points, or about 0.3%. It takes a while for these numbers to settle, but it looks like the S&P 500 is going to settle just below 6,000, down roughly 46 points, or about 0.8%. Though we should point out it was down as much as 2% on the day earlier in the session. The NASDAQ Composite down about 1.2%. The NASDAQ 100 down 0.8%, while the Russell 2000 will close out the day lower by 1.3%.
All right, Romaine, going to the S&P 500, most names in the index are lower today. Scarlett, we've got 323 names losing ground today, 179 to the upside.
All right, let's take a look at the IMAP, which shows how the sectors performed. And what you'll see is the biggest sector in the S&P 500, tech, losing 1.8% on the day. Consumer discretionary, which includes automakers, home builders, and retailers, down 1.4%. So those are names, certainly retailers and automakers, that would be affected by tariffs. Industrials also down 1%. Your green slices of that pie include consumer staples, utilities, energy stocks, typically more defensive. They have some dividends to protect them from all the headline risk.
All right, let's get to some of the individual gainers. There's a lot of red on that IMAP chart. So my gainers are not necessarily names we talk about a lot here, but IDEX Laboratories, that one finishing the day with about 11% gain. It's a $38 billion market cap life science and diagnostics company. It makes products for vet offices, so veterinarians. Top gainer in both the S&P 500 and the NASDAQ 100 on this Monday, rallying after posting fourth quarter profit and revenue that topped estimates, driven by the companion animal group diagnostics, reoccurring revenue gains. That's straight from the company. Hey, here's another one.
Animals? That's pets, right?
So basically it's vets and pets.
All right.
All right, just trying to sound, I don't know, whatever. All right, Stratasys. Let's get to that one. Another one. Again, not a name we talk about, but up 21%, rallying the most in more than 3 years intraday. It's a small cap company, folks. I will point that out. Makes 3D printers, up after Fortissimo Capital agreed to buy 14% of the 3D printing company. So that was an outperformer here. And then Triumph Group. This one was up almost 34% in today's session. It's a $1.9 billion market cap aircraft parts manufacturer, jumping the most ever. Private equity firm Warburg Pincus and Berkshire Partners agreeing to take the aircraft parts and services supplier private for about $3 billion, including debt. So definitely some outperformance there.
Okay, let's look at underperformance. And we go no further to some of the biggest companies in the S&P 500. Apple shares down 3.4%, actually down this year close to 9% at this point. Stocks did sell off, ones that were most exposed to tariffs on Canada, Mexico, and China. They did bounce off their lows after we got the delay on tariffs on goods from Mexico. Apple's certainly one of those companies with a huge exposure to China, not just from the perspective of sales to China. We've been covering that closely over the last few weeks as concerns about iPhone sales have has been an issue there. But also, of course, when it comes to the manufacturing of these products. Bank of America out with a note. It says, though, that they see the potential tariffs on impact as manageable with limited impact on earnings, saying that they only see a 5-cent EPS impact from the new 10% tariffs imposed on China if we assume that 50% of those devices can be sourced from other countries. Tesla shares falling today by more than 5%. This sort of a double dose of not so great news for Tesla. And the tariff news certainly sending a scare throughout the auto industry. I'm going to talk about GM next. Even though the cars that are made in the U.S. by Tesla are sold in the U.S., there's not a huge impact there. The concern is about retaliatory tariffs about those U.S.-made cars sold in other parts of the world, or perhaps targeted tariffs to cars sold in other parts of the world. Then there was also this news out of California, Tesla registering fewer cars in California in all 4 quarters of 2024. Sales of its Model 3 plunged 36% for the year. It could be, one of the reasons could be the result of the active role of Elon Musk in the U.S. government and during the U.S. election, as people were thinking about their next auto. Speaking of autos, General Motors shares falling today. We did see shares of automakers with big exposure to Mexico, Canada, and China being affected by the tariff threat. RBC came out with a note that said in its worst-case scenario that Trump's Mexico and Canada tariffs could result in double-digit earning hits to the big 3, including General Motors.
Can I just add another honorable mention on there? Was the drop that you saw in BlackRock today. This news kind of got buried here, but Vanguard Group cutting its fees down to basically next to nothing here, and that really slammed a lot of those big asset managers like BlackRock, State Street, and Invesco.
Was it 7 basis points for Vanguard?
On average, yeah.
Yeah.
Wow.
That's huge. That's huge. All right, going to the bond market, guys. We've been talking about it all day, but you didn't really see that safe haven buying in the back end that you might have expected on a day like today, but that front end really taking a hit because that's where you're going to see the readjustment of Fed policy. We're now pricing in just about 40 basis points of cuts so far for this year, Romain.
Palantir earnings crossing the wire. Their 4th quarter numbers look like a beat here. Adjusted EPS at 14 cents a share. The street was looking for 11 cents a share. Revenue $827.5 million. The street was looking for roughly $776 million. Here's your forecast going forward. The 1st quarter revenue numbers, $858 million to $862. That's the range. The lower end of that range, well above what the street was looking for on average. And for the full year, 2025, it sees revenue of $3.74 billion to $3.76. The low end of that range, once again, above what the street was looking for. You see those shares getting a nice pop here in the after-hour session, up about 8%.
And worth mentioning that this is a company that's posted revenue growth in the 4th quarter of 36%. So a fast-growing company, but also rich valuations, right? It gained 392% over the past 12 months. And if you look at the valuations, and I know this is a stock that doesn't trade on valuations, but trailing PE 400, forward PE 181, Carol.
Well, that's what I was going to say, right? It was so much about it, and it looks like the company is delivering because you are seeing it really pop here in the aftermarket, but you got right to it. You know, the expectations, the valuations around this one, if it wasn't going to deliver, you could have assumed that investors were going to be pretty disappointed, but that outlook seems pretty upbeat.
And going through the press release, looking for commentary from Alex Karp, who's the co-founder and CEO of Palantir. He says that the business results continue to astound, demonstrating our deepening position at the center of the AI revolution. He says our early insights surrounding the commoditization of LLMs have evolved from theory to fact. Sort of shout out that the software that is on top of the LLMs, an important play for them at least.
Yeah, also just taking a look in terms of their adjusted operating margins in general. Some analysts were highlighting the fact that their margins could be looking at some tough comps, and so thinking about some margin pressure because of that, and also given that customization required for some of their new products. But it doesn't appear that we've seen that so far.
All right, so we got Palantir up about 14% here in the aftermarket. We'll continue to watch any other headlines that come across on that. In the meantime, I'm thinking about the Super Bowl. this weekend. Sorry, I got a little choked up here. But you know what? You kind of don't have to wait for the big bucks because you can kind of find them if you are a high school player, a really standout high school player. And this is a story from the Wall Street Journal. It talks specifically about Adidas naming a star baseball shortstop as his newest big name endorser. This whole story gets into folks that are being pulled out of high school. They're not maybe even eligible to vote, but they're getting named name, image, likeness. They are like signing some really big deals with some really well-known companies.
Yeah, 40 state high school associations in the U.S., according to the Journal, now allow their students to sign these NIL deals. Texas is a holdout, even though high school football is so important in Texas.
Yeah, Friday Night Lights, right? Yeah, well, I mean, U.S. sports, youth sports, I should say, just got a lot more cutthroat competitive with NIL at a younger age. The other story we've been tracking, speaking of the Super Bowl, is Robinhood launching Super Bowl event contracts for retail traders. So if you want to place bets on the outcome of the Super Bowl, you want to kind of tune out overall news, political news, even market craziness, here's your chance to go bet on more sports through Robinhood. Sports.
I just want to eat, nachos and watch the game.
Wait, Carol, you're from New Jersey. Are you rooting for the Eagles? Are you close enough?
No, totally Kansas City.
Also,
are you kidding?
Is it because of Taylor Swift?
No, I'm a Giant family all the way. All right, guys, that's a wrap. Palantir up about 12.5% here in the aftermarket, so certainly something to watch into the Tuesday trade. That is our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We call it the closing bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Donald Trump's move to impose tariffs on major U.S. trading partners, sparking a sell-off in crypto. The index of smaller tokens at one point today was on track for the steepest two-day route in almost 3 years. Sometimes hard to follow this stuff given that they trade 24/7, Carol.
Exactly. And especially when the headlines today were kind of all over the place.
Did you see what happened with Ether, though?
No, tell me what.
Okay. The second biggest crypto, it briefly plunged as much as 27% before pairing losses. If I go to CRYP Go on the Bloomberg terminal, I can see what it's doing right now. Down about 7%.
I got to say, we follow crypto a lot. You do a show on Bloomberg Television that's all about the crypto market. I mean, they move around a lot, but the moves that we saw today, pretty wild, even by crypto standards.
Chen Arad is the co-founder and chief experience officer of Solidus Labs. It calls itself the, quote, first crypto-native security and compliance hub tailored for digital assets. The company says it monitors more than 8 trillion events each day to help make crypto safer. Welcome back to Business Week. Good to see you.
It's a pleasure. Thanks for having me. I thought I talked too much last time.
No, you did okay. You did okay.
You're welcome back anytime. I do want to talk about the price action, though, a little bit, because even in the standards of crypto at 27%, can I call it a flash crash? Like, what was that?
Well, dramatic response to dramatic events, I'd say, in an asset class that I think is really important to reminder.
Okay, but hold on. We knew tariffs would happen.
Right.
The president talked about that a lot on the campaign trail. So was it really dramatic?
Right. Well, I think sometimes something happens, but when it's something so unprecedented that the impact can still be more dramatic. I think it's an important reminder that as much as digital assets, Bitcoin, Ethereum, and the rest have matured, they're still nascent assets that can move very, very fast. You know, I'm a guy who's been in this industry for 7 years, so I've seen them drop more and rise less in shorter periods of time. So,
are you concerned with the rising correlation of this asset class with tech stocks, especially Bitcoin?
So I wouldn't say I'm concerned. I think that in a lot of ways, it demonstrates the maturity and the adoption, right? I mean, I think, and we'll talk a lot about regulation today. We're seeing a broad motion where digital assets are becoming a more integral part of other financial markets. So I think there's a lot of positives to it. And again, I think that you've seen cases where they correlated. You've seen cases where they didn't. There are a lot of explanations in each case, but I think they're still young assets, and it's really hard to predict.
Yeah, I think there was one point that we thought it was going to be like a safe haven, perhaps. Didn't kind of work out that way today. So, I mean, Tim and I talk about this a lot. Like, I still try to understand what we should think about. What is crypto?
Right. Well, I think a safe haven is
or cryptocurrencies.
Yeah, I mean, a safe haven is a dangerous term, I think, when it comes to capital markets, because nothing is 100% safe.
No.
I think oftentimes, obviously Bitcoin is perceived as a hedge specifically for inflation. So the safe haven element, I think, is true there, because regardless of whether the price is going up or down, it cannot be inflated by a government. But ultimately, again, as Wall Street has dramatically increased its involvement and is constantly becoming more involved in digital assets, I think it's natural to also assume that there will be some cases where there's more correlation.
Well, if governments get more involved, we have now a president in the White House who certainly seems much more interested in it in an upbeat way. So does that also then make it maybe more susceptible to the factors that affect traditional, if you will, or boring, our traditional boring assets that are out there?
Well, I'd say that when you look at Washington these days, and I visited twice in the past 2 weeks, met with more than 20 elected officials and their teams, there's a broad motion to figure out the right way to regulate crypto and essentially, bring it closer to the family of other financial assets. So yes, I'd say it's 100% part of the same momentum. I don't think it means that it will behave exactly like other asset classes in the long run.
So wait, should we have in our investment pie, so how is it? You've got stocks, you've got bonds, you've got cash, is it alternative assets where crypto falls into and it's a little sliver?
Well, I think that's the case for a lot of portfolios today.
But how are governments thinking about it?
Well, I think...
How's our government after the meetings you've had?
So I think the governments generally see it, first and foremost, as an innovative power that can push, the financial industry forward. So, I think a lot of the support for the assets are just because they're innovative and they're pushing on infrastructure and efficiencies and a lot of things that haven't been changed in finance for a very long time. In terms of... I think that will ultimately lead to digital assets, crypto just being considered another asset class that again has its nuances, but is an integral part of most portfolios, depending on your risk appetites, etc.
Were you down in Washington, D.C. for the inauguration? Any of the parties associated with it?
Yes, I wasn't at the inauguration, but I've been with a lot of the parties and conversations that ensued. Yes.
So I wonder what people talked about in relation to the Trump and Melania coins, because there was so much news just ahead of the inauguration when these two, we call them meme coins here at Bloomberg, when they came out. And there was also some reporting that I read about people within the crypto community not necessarily viewing it as a positive development within the industry. How do you view it?
I think that there's a lot of ambivalence. There are views on both sides.
How do you view it?
So I personally have not invested in the coin. I'm generally not particularly interested in meme coins. I think that the people who would defend it say that ultimately it's like a baseball card. Some people want to collect it now that Trump was inaugurated. There are a lot in the industry, and I think there's some truth to it who also sees it as something that devalues or diminishes a little bit the credibility of the industry. And a lot of people don't appreciate it.
To be in the position of somebody listening or watching this right now, they might say, yes, but with the baseball card, I can hold it.
Right.
With this, what am I actually buying when I buy the official Trump meme coin?
Well, you're buying an immutable proof that you're holding a digital asset. So in a lot of ways, it's harder to make disappear than a baseball card. I can't imagine how many baseball cards, well, in my case, soccer cards I have in places where I'll never find them again. So there are also advantages to it. Again, the whole world is becoming more digital. And I think there are a lot of people for whom that's not really a consideration, but for people for whom it is a consideration, don't buy it. I do think it is important to say, just to echo your point, that there are people, and many have been vocal about the fact that it's not necessarily appreciated because we take our industry very seriously. That being said, the meme token world is a huge part of the industry, and a lot of people really enjoy it. It's one where you have to take into consideration that those assets don't necessarily have the same kind of fundamentals you'd see with other assets, and you got to be careful and do your research, as there are a lot of scams out there as well.
Yeah, I think the Bloomberg wrote about that, right? The concern, the criticism was that it wasn't taking it seriously, in terms of the digital space. Hey, one thing I want to ask you, Ken, is that the president signed a measure to create a sovereign wealth fund. Would it be a dangerous measure to include cryptocurrencies in a sovereign wealth fund here in the United States if our government creates one?
Every asset has its dangers. Also in the executive order listed, that he signed last week, specifically on creating a crypto task force and working group, that includes also a scope of considering a Bitcoin reserve. So there are risks. So there are also obviously a lot of opportunities. But I think that at this point you have endowment funds, you have pension funds that think it's important enough to include digital assets in their portfolio. I think it's just natural that the U.S. government might consider that as well. Again, it's an asset that
but it's
has
the
a lot of value.
taxpayer, right? Ultimately, is on the line or feels the losses. Correct?
Right. Yes, of course.
In a sovereign wealth fund.
Yes.
Or the citizens of.
Well, I mean, yes, but they'll also feel the profits, right? Which is part of the idea of a sovereign wealth fund. I think that thinking long term to not at least consider digital assets as part of a sovereign wealth fund would be silly because they're the most successful assets in terms of growth over the past decade, I believe. But that doesn't mean that they should be invested in blindly, not by anyone, and definitely not by the government. So it should be done with care.
By the way, the official Trump, according to CoinMarketCap, has a market cap right now of $3.7 billion, down from close to $15 billion. Chen, thank you so much for joining us. Chen Harad, co-founder and chief experience officer of Solidus Labs. Up next, Edelman CEO Richard Edelman.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg, and this Business Flash is brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. Now you can see if your company qualifies at oracle.com/Bloomberg. Palantir Technology shares, they are surging after hours, right now up by 15%. It gave a full-year revenue forecast that exceeded analyst estimates, thanks to what CEO Alex Karp describes as untamed organic growth in demand for its artificial intelligence software. Again, after hours, we got Palantir now up by 14.5%. Also reporting after the close of trading, NXP Semi. It forecasts revenue for the first quarter of $2.73 to $2.93 billion. Estimate $2.92 billion. After hours, NXP Semi up by 1.2%. The Dow, the S&P, and NASDAQ all declined today as traders work to catch up on every new headline around President Trump's tariff negotiations. The S&P was down 46, down by about 0.8%. The Dow down 122, down 0.2%. And NASDAQ down 235, a drop of 1.2%. 10-year 4.54%. The 2-year 4.25%. Gold up $16 the ounce, up 0.6%. West Texas Intermediate crude just about flat on the day, up by less than 0.1%. Now it's $72.55 a barrel. So again, recapping, stocks sold off. S&P down 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. It's just been a few weeks. Exactly 2 weeks, Carol.
Yeah, busy 2 weeks.
Since Donald Trump was inaugurated, a lot has happened. Here's just a few things. A slew of executive orders. What is looking like it's turning into a trade war. Elon Musk making some big changes as part of his work on what he calls government efficiency. Some very tense confirmation hearings and upheaval in the world of AI. And more, and again, it's only been 2 weeks.
Yep, only early February. All right, so we wanted to know what CEOs are thinking, and that's why we have Richard Edelman with us. He's got a great big macro view on all that is happening and what it means for the C-suites around the globe. He, Richard, is Chief Executive Officer of the global communications firm Edelman, and he joins us here in studio. He's just back from Davos. Let's start there, because what a great starting point. And I've been talking to, and Tim and I have been with folks that were in Davos, and it seemed like everybody wanted to talk about President Trump or artificial intelligence, but tell us your perspective.
So I think the American CEOs were quite bullish. They felt, deregulation, lower taxes, a chance to, increase investment. Meanwhile, the European CEOs felt deeply depressed, and they were nervous about trade. They were nervous about regulation. I heard one CEO tell me he has 35,000 data points to give to the EU on environmental regulation every year. And that's a huge burden. So also, I would say it was a very business-like Davos. Other than Trump's last day appearance and Milei of Argentina, there were very few government leaders. So it was a much more business-like Davos.
It's interesting that you say that. You're probably the second person to tell us in just a few days that the mood of European CEOs was pretty gloomy.
Well, they're gloomy because I think they feel trapped between the U.S. and China. They have big sales in China, cars, et cetera.
Right.
Their energy costs are high. Their regulation is high. And frankly, they're nervous about the German economy, the French economy, both of them wobbling along. So they don't have domestic demand like the U.S. does.
So it's interesting as, we navigate from day to day, hour to hour, the headlines that come out of the White House and the Oval Office. And so I am curious, was there a perspective among the global CEOs, or more importantly, the American CEOs, that it's kind of a wait and see, that we think some of it is a lot of talk, and that ultimately, as you said, policies will make business sense, and they might not be as extreme as some of the conversations around them are?
I think,
or you can tell me I'm wrong.
No. Look, I think our trust barometer came out in time for Davos, and the thing that was so noteworthy, Carol, is that we see the world slipping into grievance, and that 60% of the world's moderate or high grievance, and especially in Germany, 35% of people highly aggrieved just before their elections.
Yeah.
And why is that? Well, it's inflation. It's the sense that my family won't be better off in the next generation. Lack of hope. fear of job loss to AI. And so I think business has every way to solve this. You know, give me a good job, reskill me, have affordable products. That's the playbook. And CEOs need to make sure that it's about their business.
Why do you think we see this happening around the world? You know, it's not, this idea of grievance is not particular to one single country or one single region. Well, is this a post-COVID phenomenon? Is it a rise of the cost of living phenomenon? Is it a globalization phenomenon? Is it all of the above? What is it?
It's an absolute, it's like dominoes. And so, you know, you start with the mass class divide, and you have a battle for truth, and you have this problem of COVID 5 years on, where people, mental health and other things, and then you have all the geopolitical issues. And so all of this is a lot, and people feel continuously punched. And so I think they used to take it and just have fears, and then now they're aggrieved, and they're prepared to fight back, and whether it's misinformation or even violence, this is what we start to see. And business has every reason to be concerned about this, because business is distrusted by the highly aggrieved. It's different than most, because business is the most competent, most ethical, except for the highly aggrieved. So business has to try to pull people back from this cliff and make people feel as if they have good jobs, they can get well paid, they will be reskilled and can compete.
So what's the problem? Is it that workers aren't sharing in the profits? I mean, you know, we're in earnings season. We see it. I mean, companies are doing well. And is it a case that they're not sharing all of those with their workers?
Well, here's an example. In Japan, there hasn't been really a raise for workers for 30 years.
Okay.
And so you get the idea of why people in the lowest quartile of income feel deeply aggravated relative to the higher income.
So why aren't CEOs appreciating those workers at that level?
I think that they are, in the sense that they use them, they put them in jobs. But the truth is, there's been outsourcing, there's been globalization, there's now AI. All of this is towards cost and effectiveness. And so CEOs are balancing a lot of these factors, but they do want employees to work hard and be satisfied. And the key to that is pay.
We saw CEOs 2 weeks ago stand behind the president at the inauguration. Some, exactly, not all. We saw many prominent ones there. In general, we have seen some CEOs share their views politically more so in recent weeks and recent months than we're sort of accustomed to. You said there's this idea that they're cheering deregulation, they're cheering lower taxes. But what about the chaos that's associated with the administration thus far? Is it a distraction to them? Is it what you get with Donald Trump, because we knew that in the first term? Or is it something that concerns them because they need to make decisions about their businesses in China, in Canada, in Mexico?
I think CEOs need to argue for agenda items that suit their business. So, for example, if trade is a key part of your business, you should go out and advocate for free trade and say, this is going to cause inflation, or it's going to make my supply chain inefficient, or it's actually going to cost jobs in America. But also, the non-American companies need to make the case for investing in the U.S., putting more manufacturing here, making sure that it's aligned to the president's agenda. It's both. But I don't believe that CEOs should stick their heads up and be very political. I think they should do their businesses.
But, you know, I want to go back to what you said. 61% globally have a moderate or high sense of grievance, which is defined by a belief that government and business make their lives harder and serve narrow interests, and wealthy people benefit unfairly from the system. I'm waiting for, like, the deluge of emails of, like, yeah, we got that, Carol. Like, that explains politics that are going on. But, like, Richard, is it just a case of paying workers more? I'm not saying just. I don't mean that. But I mean, is that the fix? Because there are a lot of disillusioned individuals here in the United States and around the globe who just feel completely left behind.
So inflation is corrosive. Got to get inflation under control so that people feel as if when they run hard, they're not running into the wind. Second, they got to feel as if they have a chance for the future. Reskilling, upskilling, core. And then third is pay and continuous ability to get to a better place.
That seems like such an easy fix. Why then aren't we getting there? Like paying workers more, we've had guests on, right, talking about a living wage and then some. Why isn't it being done?
Because we're not taking full advantage of what's possible. AI is actually an enhancement tool for workers to be able to produce more. I mean, in my business, I can see how much faster people turn out press releases and message points and things like this. Everyone's got to put AI into their workflows. Also, we've got to be sure this reskilling thing so that everyone feels as if he or she can compete, not just the 22-year-old who's just out of school.
Because I feel like we've talked reskilling for years.
Yeah, it's true, but we've never done it. We've never done it in an effective way. And also, business can't do this alone. Business should do this with government and NGOs. And the secret here is NGOs, non-governmental organizations, they're local. They're also actually believable for the high grievance people. Business is not. So business should partner with community organizations.
We were supposed to see reskilling after NAFTA. And obviously that didn't happen to the extent that many people thought it would or were told that it would. And we can see what's happened today as a result of some of the problems in certain economies around the country. How do these workers use AI if they're not in part of the knowledge economy, or if they're not writing press releases, if they're not writing message points? Like, what is the way that for people to embrace AI rather than be scared of it?
So one of our clients, Honeywell, is using AI on the factory floor and making their workers more productive. That's the key to the future. And actually, blue-collar workers have much less job risk than white-collar in insurance and other things where they're repetitive skills. So blue-collar workers could thrive. This is a very important message that most people haven't absorbed, and we need to keep telling this. And we also need optimism back in this country. We need to make sure that people believe again that the country can do better, because in the moment there's this inundation of negativity, and I think competence and ethics will get you so far, but if you want to run an 8-minute mile, it's aspirational for me these days, but I have to believe that I can.
Yeah, I think it's fascinating that we also, at the same time, have been talking about American exceptionalism, like in comparison to what's going on in Europe and so on and so forth. But there's so many people in our society that don't feel that. When we talk about stock market, well, not everybody's in the market.
Only half the people are in the market.
Correct. And I look in my world, people I talk to, a younger generation, are like, I'm not going to have kids. How am I going to afford kids? I can't even buy a house. Like, it's just crazy.
But again, the chance to get to optimism is based on specific actions. And if there's a national reskilling campaign, or even by cities, I think this is interesting, Carol. The trust has gone local. Trust in my mayor, my country, my company, my CEO is much higher than anybody else. So this is a channel that companies should use.
Great to check in with you. But go.
We've been speaking to you for years. In terms of the 25th year of the Trust Barometer, things better or worse? What's the trend?
I think we're at a precipice. I think we are at a place now where we've got to reverse this trend of grievance, because when people are aggressive, they actually reject innovation, and they're scared, and they fight any change. And we have to get them to a place where they accept change.
Richard, thank you, as always. He is the CEO of Edelman, Richard Edelman, joining us right here in our studio. I'm Carol Master, along with Tim Stanovic. This is Bloomberg Business Week.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Canadian Prime Minister Justin Trudeau and President Trump have wrapped up their phone call. Canada saying it got a 30-day reprieve on U.S. tariffs. Trudeau saying he had, quote, a good call with President Trump. Also, Trudeau says Canada will name a fentanyl czar. Again, we'll have more details as they become available, but the headlines breaking right now on the Bloomberg Professional Service. Keeping tabs on Palantir shares after hours and after earnings. Right now, looking at Palantir stock, it is surging by just about 17%. Turned out to be a down day today for the Dow, the S&P, and NASDAQ as traders struggle to catch up on every new headline around President Trump's tariff negotiations. The S&P 500 index ended the day down by about 0.8%, down 46 points. The Dow was down 122, a decline there of 0.3%. NASDAQ down 1.2%. 10-year 4.55%, the 2-year 4.25%. Gold up 0.6%, 28.14 the ounce, while West Texas Intermediate crude was down 0.2%, 72.35 a barrel. Well, certainly tariff talk dominated today's session. Patrick Frizzetti is a partner and managing director at Rose Advisors, and he was a guest right here on Bloomberg Business Week.
The one thing that's clear when it comes to trade, the Trump administration prefers bilateral over multilateral, and they're willing to use economic tools for non-economic goals.
And again, repeating our headline and top story moments ago, Canadian Prime Minister Justin Trudeau said U.S. tariffs will be paused for at least 30 days. Recapping, U.S. stocks lower today with the S&P down by 0.8%. Stay with Bloomberg for the latest on these developing after-hours tariff stories. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. As we just heard from Charlie, Justin Trudeau says there's been a delay in tariffs for 30 days. Nearly 10,000 troops, he says, will head to protect the border between Canada and the United States. President Trump said his call with Trudeau went very well in a quick exchange with a CNN reporter as Trump left his White House event with the Stanley Cup winners. So, Carol, it's a very fast-moving story.
Totally.
We heard a reversal on those China tariffs earlier today.
Yeah.
Unclear what's going to happen
in Mexico,
in China.
Right?
On
Earlier
Mexico,
today.
yeah.
Yeah.
Did I say China?
Yeah, you did.
Oh, excuse me. On Mexico earlier today.
That's TBD.
That is, yeah, China is TBD, and that's exactly where I want to go, because we got with us Spencer Soper. He's been watching what's happening on the retail front. He's technology and e-commerce reporter for Bloomberg News. He joins us from Seattle. Spencer, there's been this long-held tariff exemption for packages worth less than $800. I didn't know about this until you wrote this story. It's set to be taken away. What is this de minimis exemption, and how has it fueled the rise of Temu and Shein?
Yeah, so this goes way back, right, about 100 years, when there were tariffs in the 1930s to try to help U.S. farmers in global trade. And so, but it was so long ago, they didn't realize when they imposed these tariffs that it created a lot of problems when international travelers were entering the country with like luggage full of trinkets and souvenirs and stuff, and it was creating a lot of chaos for customs agents. So they put in what is called the de minimis exemption, and what it means, it's something of such small or marginal value that it's not subject to the tariffs. Fast forward to the e-commerce era, and that's become a big gaping loophole to dodge a lot of the tariffs that Trump imposed in his first term. And so companies like Temu and Shein are able to utilize that de minimis threshold by sending individual orders directly to customers from China, in packages. So if you've ever ordered off one of those platforms, you might wait a week to get something. It'll be shipped to you directly from China. And because it comes in under the de minimis threshold and without a tariff. The alternative way of buying something from a store or from a big online retailer like Amazon, they generally source that inventory in large containers, cargo containers, and so the tariff is assessed on the overall value of that shipment. So you have to pay the tariff there, but you escape it with an online marketplace like Temu or Shein.
So that could change, and that would have certainly a big impact on a lot of products potentially coming in from China that have been exempt, correct?
Yeah, exactly. And so it's still clear as mud, the way a lot of things Trump says are, it's like he'll say something and then exactly how it's going to be interpreted and executed is murky. So what we're unclear about is, he imposed this new 10% tariff on goods from China and eliminated the de minimis threshold on that. What's unclear is, does it apply to all of these earlier tariffs that he imposed? And we're still waiting to see exactly how the departments that will be assessing these tariffs are implementing this new rule. So there's still some clarity we're waiting to see there, but it's a big move in the sense that it's actually targeting de minimis and recognizing the loophole that it is, whereas Trump didn't say a word at all about de minimis in his first 4 years, and that became a huge loophole for companies to dodge his tariffs.
So, Spencer, we talk to you oftentimes when we're talking about Amazon, and we have Amazon earnings coming this week. Amazon shares were flat today, which is kind of a difference than some of the other big players that fell significantly today. Is this great for Amazon that the Temus and Sheins will be subject to tariffs and, they might get around it? Or is it not good because Amazon sells this stuff anyway? They'll just have to pay the tariffs at a different point in the process.
Yeah, Amazon has some exposure to this, a lot less exposure than Temu and Shein, whose entire business models were around this. So it's just more limited exposure. And oftentimes when there's some big sweeping mandate that affects a lot of companies, Amazon just comes out ahead because folks just figure they'll navigate the situation better than a lot of their competitors, is all I can really say there.
Okay.
In your reporting, it says a senior administration official who briefed reporters on the new tariffs over the weekend sought to justify ending the exemption, saying that the U.S. loses a tremendous amount of tariff revenue and that the loophole for smaller value packages also impede the ability of U.S. customs officials to catch fentanyl moving into the country. But what I wanted to get to, not the fentanyl side of it, Spencer.
You want to know if when you come back from Europe, you're going to have to declare all this stuff that you weren't supposed to declare, because that's what I want to know.
But I mean, how much are we talking have been part of this de minimis rule or loophole? How much are we talking about? A ton of stuff, or is it a small amount of stuff? I'm just trying to get an idea.
Yes, we're talking millions of packages a day. It's crossed the $1 billion threshold annually last year for the first time, and I'm sorry, in 2023. And in fiscal year 2024, it was 1.4 billion. It's been growing astronomically with no end in sight. And so the U.S. Customs and Border Protection is completely overwhelmed. They just don't know how to handle this volume. So it's created a big problem within these agencies, and it's getting there are a lot of people happy that it's getting a lot more attention.
Do you think? I do have the question, Carol, about.
You're worried about the next time you come back from overseas?
Yeah, I haven't done overseas travel in a while, little kids, but you fly back and you have to fill out those forms, Spencer. You said the whole idea was that this actually came to fruition because of travelers. Does that mean travelers are going to be affected and kind of have to do more paperwork?
I seriously doubt it. Especially it's going to depend on which country you travel from, But the main concern that the Trump administration is pushing is that they're really concerned about fentanyl.
Yeah.
They're concerned that because this volume is so huge and it's been coming in faster than these agencies can handle, that creates gaps where fentanyl and precursors to fentanyl can slip in. And so if you're just a tourist coming back from another country, you're less likely to be a target of this.
Spencer, forgive me, 20 seconds. Is he right? Is the president right that it is hard to detect fentanyl in these packages just very quickly, or we don't know?
It's very hard. You can't possibly hire enough people to inspect all of these packages, the volume that they're coming in.
All
so
right.
yes, any kind of contraband can come in, and even stuff that just exceeds the threshold can come in.
All right, great to check in with you. Spencer Soper, he's technology and e-commerce reporter here at Bloomberg News, covering a lot of things, including Amazon and everything in the e-commerce space. This is Bloomberg Business Week.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, what a 24 hours or even less than that. Carol Masser along with Tim Stenovec live here in our Bloomberg Interactive Broker Studio. It's only Monday, Lemon, as they say. So it's interesting that we came into this before the market opened on expectations that tariffs were hitting against the three major trading partners of the United States. And then we saw not a rollback, but a delay on those tariffs with Mexico. And then just a little while ago, we saw same delay or similar delay in terms of the tariffs against Canada.
Let's get more with Bloomberg News White House editor Jordan Fabian. Jordan, good to have you with us. Your story, among the most read in the last hour on the Bloomberg terminal, about Canadian Prime Minister announcing Monday that those new U.S. tariffs would be paused for 30 days after this call with President Donald Trump. What is the agreement that they seem to have come to?
It's basically an agreement to talk more. The Prime Minister said that the tariffs would be put on pause for 30 days while they discuss further issues on border security, which is the pretext that President Trump has used to threaten these tariffs. And he also announced some new steps that he said that Canada is taking to try and secure the border, appointing a new fentanyl czar, spending some more money to secure border checkpoints, sending 10,000 officers, et cetera. So, all stuff, all the type of moves that have already been kind of in motion, but sort of gives President Trump the ability to declare something of a victory here in the spat with Mexico and Canada.
I mean, what are we hearing in terms of kind of the mode of the president in terms of, getting what he wants and, kind of talking up tariffs? I mean, we kind of expected it from day one when he was in the White House. Didn't get that right away, but have been counting down to it from late last week. Do we now then think that sometimes he's going to say things just to kind of get something he wants and ultimately isn't going to really change policy significantly? Are we starting to feel that way?
Well, there's a lot of confusion here, Carol, because Trump hasn't really said what he wants from these tariffs and whether he's actually willing to follow through. Are they a tool to rebalance U.S. trade relationships and collect more revenue for the U.S. government, or are they just this negotiating tool to get other nations to agree to his concessions on unrelated issues like immigration? So far, it appears to be the latter. He did this with Colombia, too, as well, you recall, last weekend, where he got them to back down the deportation flights. So far, he doesn't appear serious about his ability or his willingness to follow through on these tariffs. The markets were looking very bad this morning. He's a close stock market watcher, not so much of a leap of imagination to say that could have weighed on his decision here. But we'll have to wait and see. It's only the third week of this administration. His thoughts, his mood about this can change, but so far it's been very unpredictable, and that's what I think is helping keep these other nations on their toes.
I think one thing that's been challenging for folks to figure out is the Canada side of this. John Authers has a Bloomberg opinion column out. We spoke to him at the top of our program, and he made the point that many people have made, which is we don't see Canada as being a source of immigration or fentanyl coming over the border. So if that's the yardstick, or if that's the metric that they're going to use to determine how long tariffs are imposed, if they do end up getting imposed, then how do tariffs come off of that country? I know we're speaking a few hypotheticals here, especially given what we learned from Trudeau, but do you know what I'm saying?
Totally, Tim, and it is hypothetical because if you read the executive orders, there's no benchmarks that Mexico or Canada need to meet in order to get the tariffs lifted. It's sort of just whether this pleases in some nebulous way President Donald Trump. And so that makes it very difficult for them and for investors, anyone watching, to discern what's going to happen here. And as you rightly pointed out, Canada, much less of a source of migration and drug trafficking than Mexico. So I think it confused a lot of people, and all I can say is the pattern of behavior so far is that he's willing to walk right up to the line of imposing these tariffs on trading partners, but not going to cross that line so far. China may be a different story, but nations like Canada and Mexico, we're seeing that form together here.
All right, so Jordan, the week is young. Next stop, China?
That's right. He's also threatened these 10% tariffs on China. He said that he would be speaking to Chinese officials in the next 24 hours, probably. So we'll have to keep our eyes open for that as well. And again, you know, metrics, sort of deliverables here, not really clear. So we'll have to see what comes out of those talks.
Yeah, kind of fascinating. No, and we kind of went into this, right? We saw certainly, you know, a very different market set up prior to the open and at the open versus where we ended the day. And it really are seeing investors kind of trade on these tick by tick in terms of the headline. So we'll see what the week will bear. Jordan, thank you so much. Wrapping it up and tying it up for us nicely as we get ready to sign off here on Business Week. Jordan is Jordan Fabian. He's Bloomberg News White House editor, joining us from our DC bureau.
As I mentioned, on the Bloomberg terminal, Carol, this is what is the most read in the last hour. Trudeau says U.S. tariffs delayed after the troops pledged. That's on our top live blog. Also, we should note that that Canadians booing the U.S. anthem as they seethe over Trump's threats. Also among the most read.
Yeah, and let's not forget, folks, we are in earnings season. Palantir came out with their earnings, and we are seeing that stock surge in the aftermarket. This is after the company gave a full-year revenue forecast that exceeded analyst estimates thanks to, quote, untamed organic growth and demand for its AI software. So, you know, go back, what was it, just about a week or so that we are questioning that AI model, and Palantir coming out and saying differently. So once again, that's a stock that's really rallying in the aftermarket.
20%.
Yeah, that's a big boom. Yeah. So just remember, more earnings to come this week. We've got some big ones, Amazon and Alphabet, so we'll be breaking them down. All right, that's going to do it for Tim and me. Have a great and safe evening, everyone. I'm Carol Massar, along with Tim Stenbeck, right here on Business Week. Balance of Power starts right now.